Last week, the S&P 500 was very mixed right across the board, but one of the biggest winners was Palantir, up around 9%, and this company now trades at $40. When we take a look at its performance, it is up 154% just over the last 12 months and does currently trade right there at its 52-week high at $40. Now, we do note a triple hold rating right across the board, but is this a company that can continue its enormous growth and be one of those that we can see as a significant multi-bagger over the next few years? Well, when we take a look at an article, this is from May this year, so quite some time ago, it talks about how Palantir could be a 1 trillion stock. Bear in mind, when this article came out, the market cap of this company was sitting at 50 billion. Right now, as we can see, this company does have a market cap of 90 billion. So it has been on a very, very strong run just over the last few months. And as we can clearly see, that has continued over the last year as well. So let's take a look at how they've done in terms of their latest business update, understand what is driving this growth in the share price, and in terms of just some of the key highlights that we will discuss, we can see their revenue is up 27% on a year-on-year perspective, up around 7% on a quarter-by-quarter basis, and something that is very impressive that we hear constantly in the news, that Palantir is gaining lots of momentum with some significant deals and for some real significant value. Now, we can touch upon some of this today, and as we mentioned, their deals are something that is very attractive about this company. Just in the more recent quarter, they signed a 5-year deal, and that is worth 480 million, and that isn't just the first one. There are also some significant contracts they have been getting in the more recent period. In terms of looking at it as an overview, as we can see, some very big things to highlight here. In terms of their commercial deals, well, that is up 98% on a year-on-year perspective, and we can see in terms of the actual value, which is probably a better gauge of how successful this company has become, plus 152% on a year-on-year. Now, there is a lot of information to dissect within essentially their slides, but none other is more important that they are now quite consistently turning gap positive. As we can see, this is now for the 7th consecutive quarter, and this is not just reflected on their bottom line, but also very importantly in terms of their operating income. This is the 6th quarter, and something that we will touch upon shortly is that their margin is increasing and at a fairly respectable rate. Remember, with companies that we invest in, we want them to increase both top line as well as their margins, and as we already talked about, their revenue growth is looking very respectable. Commercial revenue up 33% from the same quarter last year, and we can see here just the US commercial aspect up 55%. No surprises, as we've already said, contracts do come very quick for this company, and that just shows how impressive Palantir is becoming. Now, in terms of government revenue, well, up 23% from the same quarter in 2023. In terms of US specific, not too far off there, around 24%. In terms of total revenue growth, up 27%, and they do expect this to continue. No surprises with all of these contracts that they are gaining. And one thing that we always want to discuss on this channel, as we've mentioned, is operating efficiency. We do notice their margins have been increasing over the longer term. In fact, from the same quarter in 2023, their operating margin was at 25%. This quarter, 37%. And if this continues to climb, this will make them incredibly attractive. One thing that we haven't mentioned, though, for those that do value this company on a forward PE perspective, it does look very high, and maybe you can start to understand why it does trade at a very high rate. Whether or not you agree with that forward PE, that is something we can continue to discuss. Customer count looking very good, not just up 83% year on year, but as we said earlier, the actual numerical understanding of these contracts is up triple digits, so very impressive. And in terms of the specifics of the deals, 27 of the 96 deals that they did close were at least worth $10 million. So very attractive to shareholders. Not only are the deals increasing in terms of the numbers, but also the value of them are also moving in the right direction. And finally, what's really important to understand, they are continuing to estimate growth moving forwards at a very desirable rate. We can in fact see they believe US commercial revenue will be around a 47% growth rate for full year 2024. And as we will come to look at the discounted cash flow model, they believe the free cash flow for full year 2024 will sit around the $800 to $1 billion mark. Now, we can go back to this essentially at the very beginning just to highlight that in terms of the forward P, it does trade at 113. we will take a look at this in terms of the respective earnings moving forwards and how this is expected to come down into the double-digit region. Now, what we always want to take a look at on this channel are the underlying metrics. First one, free cash flow. What we like is that whilst it has been negative, which isn't what we want to see, it has turned positive and we have 3 years of positive free cash flow. We also note over the next 12 months, this is anticipated to increase from 32 cents to 38 per share. Sales growth also looking very good, double digit every single year. Yes, it has been decreasing from the highs of 2020, but as we can see on the trailing 12 month at 21%, it goes to show us, and from what we have just looked from their latest investor presentation, they are expecting that top line to start accelerating. In terms of a numerical format as well, 600 million reported in 2018, 2.23 billion in 2023. And whilst we don't like to see this in companies in terms of shares outstanding increasing, this is effectively showing us that they have been diluting your position as a shareholder due to the increase and issuance of equity. Now understand, you probably don't care if you are a more recent shareholder and you have been seeing some very nice growth in terms of the share price, but just something to consider. If they've done it in the past, it may be something that they are expecting to continue to perform. ROIC, our favorite metric, 10% or more. Give us faith, management are able to effectively allocate their capital. 3% in 2023, now not great. Positive to note here, it has been improving every single year over the last few years. 7% on a trailing 12 month. That does give me confidence that moving forwards, this number will improve, as we have seen with all of the other metrics, their bottom line net income, their operating income, their margins, all moving in the right direction. Operating margin, and something that we actually didn't mention when we just looked at the ROIC, they haven't been turning a profit for that number of years. So something we want to point out is it has just turned positive on the bottom line, as we saw from one of their investor slides. 5% in 23, 12% over the last 12 months. This is pretty much the minimum we want to see. And as we just heard, they are expecting this margin to increase over the next few quarters. And we have seen that increase over the last few. Free cash flow margin also looking very strong over the last 3 years, 34% in 23, 30% on a trailing 12-month basis. And again, if you do believe they can keep up this consistency, then there are no reasons why Palantir shouldn't become a very strong company. Whether or not it hits that 1 trillion mark is something to bear in mind. Net debt to EBITDA, earnings before interest, tax, depreciation, amortization. This is the number of years it would take them to pay off all of their debt net of cash on hand. It wouldn't even take them 1 day over the last 4 years. Wouldn't even take them 1 day over the next 12 months. So we can see very, very strong balance sheet. No worries for this part of the analysis. Now, one thing that we do have to highlight that they have come under the spotlight recently is in terms of insider selling. And what we note, the ownership pretty high, we have to admit, around 13% in comparison to what we have seen on this channel. Around 1.1 billion worth of sales by insiders over the last 12 months. Well, probably the highest we have actually seen on this channel. And we do note in the more recent quarter, Q3, 649 million worth of sales. Now, for transparency, who those insiders are, we can in fact see the director, Peter Thiel, did sell on the 30th of September, so the latest tranche, around 4 million worth of shares, and in fact just a few days prior around another 4 million. Now this would have netted him just for that period around $300 million. Remember, insider selling isn't a bearish signal. Ultimately, insiders sell for many reasons, personal or financial, and the interesting thing to note is that right now the shares are up around 10% higher than what he did sell. So make of that information as you will, but for transparency we just want to show the sales as well as ideally the buys. That is what we want to highlight on this channel. Now when we look at it in terms of an institutional aspect, 46% ownership, 875 million worth of sales over the last 12 months, with a lot more buying during the same time period. And when we look over the more recent quarter, Q3, we see 21 million buys with 733,000 worth of sales, and in the previous quarter we see a little bit more buying than selling, something we see a common theme of over the last 4 quarters. So we do notice here institutions do like Palantir, they are buying more shares than they are selling. Now before we continue, we want to let you know we do release a free weekly newsletter every single Monday, and what we discuss is what's happened in the market over the last few days and some undervalued dividend stocks. In the more recent article we talked about 3 stocks we are buying in October, and you can click below, sign up, read straight away and get that instant access. On top of that, you will be able to get a spreadsheet of 36 undervalued dividend stocks for the month of October, where we also look at those that sit within our own portfolio, and you will also now have access to 22 undervalued dividend stocks with the most upside according to Wall Street. So do check it out, click below, sign up, and you can read straight away. Now, just to show you, when we do look at their revenue, as we mentioned from a graphical perspective, it has looked very strong over the last few years, going from around 600 million in 2018 to 2.2 billion in 2023. But we really want to highlight here the story of the bottom line net income. And as we can see from a graphical perspective, December 2023 was the first full year where they reported a net profit. And as we can see from the numbers here, very inconsistent. Nice to see December 2023 and on a trailing 12-month basis profitability. And as we've looked, this is something they do expect to maintain moving forwards. Then we look at the balance sheet. Just want to show you that net debt to EBITDA reflection in these numbers. Total cash, which has been increasing over the longer term, now sits at around 4 billion in the latest quarterly report. And when we do compare that to their total debt numerically and directionally, we can see it's gone from 0 in 2018 to 259 million. So if they really wanted to, they could pay it all off within a day. Then we want to look at their expectations moving forwards, and we can see their EPS over the next 4 quarters are expected to be an increase of a double-digit movement. And prior to that, we see the previous 4 quarters, they've either been in line or beaten management targets, so a nice 100% track record. If they do hit their December 2025 target, the forward PE will come down to around 93. In terms of looking at some gradings and underlying metrics, the first one is the valuation of an F. Absolutely no surprises here, not just on the forward PE, where we do note the sector mean is significantly lower, but pretty much any other valuation metric you use, it will tell you Palantir is trading at such a significant premium to the overall sector. Now, whether or not you do believe it deserves a premium and whether or not you believe it deserves this much of a premium is the question we need to ask ourselves as investors. Although we do understand why it does trade at a premium, just look at the growth, for example, where they get an A, 21% versus the sector median of 2.99. Moving forwards, they still anticipate strong double-digit growth, which is still well ahead of the sector median. And in terms of the earnings per share moving forwards, they're anticipating 24% year-on-year over the next 5 years, whereas we can clearly see here the sector median around 15%. Now that also continues into their profitability, where they do have that A-. This, as we can see, is shown in the numbers: 81% gross profit margin versus 50% sector median. Bottom line 16% versus 3.7%, and we also note their cash from operations are very high at 708 million, significantly higher than the 98 million from the sector overall. Now look, as part of a conclusion, we do note that all 3 analysts give this a hold, that is Seeking Alpha, Wall Street and Quant. We have already discussed that valuation metric of F, and nice to see a growth and profitability in the A region. Now finally, before we do move into the valuation model, one thing that we do want to flag when we do compare it to others in the application software industry, as we can see some very big names of a fairly similar size, Palantir this year has performed very, very well, up 154%. The others, whilst they have been positive, nowhere near this company. So let's jump into the valuation model right now. As always, if you do enjoy the content, value is being provided, smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. Now the DCF model, we have around $41, so let's go through and understand where we got this from. We have the free cash flow over the last few years. Average growth negative, it has been skewed from negative to positive over a number of years, and we've gone for a 30% growth rate moving forwards. We have a low, medium and high, and with the 30% we have the discount rate of 8%, which gives us the present value of future free cash flows and terminal value. We add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as we can see here, pretty much not far off. We do get the undervaluation signal that is fairly trivial, as we can see, 2%. Now remember, these numbers are fairly subjective, so you can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for Palantir or any others. Also, for full transparency, we just want to show you at the 25% rate, we do believe the intrinsic value of $31, that is downside of 22%, and at the 35 percentage point, we can see intrinsically $54 with 34% upside. So in terms of the 30%, which we have got as the medium today, taking it through, we always like to do a margin of safety on this channel at the 10% point, which we use and execute if it meets our 3 golden criteria: wide moat, strong financial metrics, and good forward-looking data. Now, if you believe that in today's episode it is a buy at $37, which ultimately means in today's episode we see this company right now trading at its intrinsic price. For those that just want to see, well, 15% MOS, a buy at $35, at 20% around $33, and at 25 around $31. Now remember, this is one that we did discuss when it was around the $20 mark, and now it is pretty much double that. So whether or not you do believe this is a strong company to buy for the future, we are interested to hear your thoughts below. We also noticed that Wall Street have upgraded their price target to $45, where they see 13% upside. So it really depends on whether or not you believe this can continue to be a multi-bagger over the next 5 to 10 years, or whatever your time horizon is. Now for those that do believe it can be a 1 trillion stock, what we notice here is that for it to hit the 1 trillion mark, the share price would be around $440. Now, whether or not you do believe the growth can continue, we've seen very impressive numbers. The contracts seem to increase on a weekly basis. Margins are becoming stronger. They are now looking very consistently in terms of a GAAP profit, both on the operating income as well as the bottom line. But there are questions whether or not the valuation for this company in this moment in time is a little bit too high. As always though, as we said, give us your thoughts below. Is this one you are looking to buy, maybe one you're looking to sell, or for the time being, like Seeking Alpha, like Wall Street and Quant, you are looking to hold? If you enjoyed today's episode, smash that like button, hit that subscribe and bell button. Don't forget to sign up to the free weekly newsletter, which we are dropping tomorrow morning. And as always, come and join us in the Patreon, where we do discuss our weekly buys and sells. As always, have a great day, and we'll see you all on the next one.